SPY and QQQ are approaching their 200-day simple moving average, at the same time that the VIX is settling into strong daily support. Is the market due for a strong pullback, or will it just keep grinding higher? And is IWM small caps telling us something that we shouldn't be ignoring? Join me in today's market analysis as we cover key levels and setups on SPY, QQQ, IWM, Dixie, and more. Nothing I say is financial advice. These are just my thoughts, opinions, and cats. Welcome back, cool cats. We've got a lot to get into, so we're kicking things off with SPY. Looking at SPY on the daily, the upper Bollinger Band here in light green is currently at 577.44, so there's a little bit more room to move up. SPY has been struggling with this very key level around 565, as we can see how it pulled back to the 50-day simple moving average here in lavender, then pushed back up. But SPY still hasn't touched its 200-day simple moving average here in purple, which is around 573, which would also be confluent with the upper daily Ichimoku cloud resistance, and the 100-day simple moving average here in blue is just above it around 576. The RSI is showing slight bearish divergence as well, where the RSI makes a slightly lower high, but price made a slightly higher high. So there is a lot of confluence for the market to pull back sharply before pushing through all of that resistance. However, this recent pullback here, plus all of the sideways consolidation that preceded it, already built a decent amount of liquidity. And the longer that the market trades underneath the 200-day simple moving average instead of just pushing straight up to it, the less likely it is to reject as hard off of it. Zooming out on the weekly with the same indicators up, we can see how SPY rejected the 50-week simple moving average in lavender right around 568.80. And the 21-week simple moving average is just above it around 575. If the market could break above that, it could lead to a short squeeze on the weekly time frame because there is little resistance above that all the way back up to previous all-time highs at 613.23. And if we look at the RSI ascending triangle that I've covered in previous videos, on the weekly time frame, it's getting pretty close to touching the previous support line, which could now act as resistance to strength. On the daily, the last things to point out is that the market is convincingly above the green downtrend line from February 21st, which is bullish. Zooming into the 4-hour time frame, if we extend the lower support line of the symmetrical triangle that we've been covering, it shows that if the market pulls back to about 560.30, we could see another sharp bounce if that support holds. And if we zoom in a little bit further, we can see that that line is confluent with the previous resistance line of this inverted head and shoulders pattern, which SPY broke above on May 7th, retested this line the following day, and does appear to have confirmed it as support. And I mentioned in a post earlier this week that I had identified another key trend line that goes all the way back to March 2020, the pandemic low. And if we zoom in a little bit, we can see that it obviously acted as support there. It acted as support again in October of 2022, then again in March of 2023, then again in October of 2023. And look where we are right now. The market came down, hit that line, bounced pretty aggressively, came down, struggled with it again, finally broke it. And that's when we got this waterfall event. So right now, what the market is doing is it's consolidating around that line and this key level of roughly 565. So getting above that line could be another bullish sign. And last but not least, there are two possibilities floating around the internet that you may have heard of. So let's take a look at these. The first is that this might just be one giant inverted head and shoulders pattern with the neckline around 577 to 570. And that would mean that SPY is targeting a roughly 95-point move up to around 666 if so. But there's one reason I think that isn't likely. That would place SPY well above the main red resistance line that we've been covering for months, and would also place it above the resistance line on SPX that hasn't been broken since the Great Depression. The other pattern, if it isn't obvious, is that it may be forming a rising wedge, seen here in yellow, with a breakdown target of roughly 63 points, which could place SPY somewhere around this previous demand area between about 504 to 510. We can't rule these possibilities out, but I still see no one else pointing out that a potential symmetrical triangle or bullish megaphone pattern could be in play. If you didn't already know, I post timely market updates throughout the week on StockTwits, X, and the YouTube community tab. And if you're getting value out of my videos, please don't forget to subscribe with notifications so you won't miss any market moving insights. YouTube tells me that roughly 45% of you who listen to my videos haven't subscribed yet, and I'd love to continue growing this community, and I engage with everyone who comments. We're seeing similar things on QQQ, but slightly different. QQQ actually pierced its 200-day simple moving average around 491 on May 8th, but rejected off of it. This is actually being the second touch of it. My thesis has actually been that since big tech is leading the way in the market, both down and up, that we would see a rejection off of that moving average on QQQ, the market would build liquidity, and then we'd likely see a stronger rejection off of SPY's 200-day simple moving average. And again, the longer that we consolidate under these moving averages or hit them and reject, but keep pushing up, the more likely they will be to break. QQQ's 10-day simple moving average is here in light green, around 482, and is likely to act as support if the price comes back down to it, whereas its 100-day simple moving average is around 497. And if that gets hit, it will likely be confluent with the resistance that we just covered on SPY. And I've said it before, and I'll say it again, if QQQ manages to get up to the previous support line of its multi-year bullish channel here in purple, around 520 to 530, depending on where it gets hit, I would expect bears to be waiting there salivating, because it would also be confluent with this exuberance line that we've covered many videos ago. Zooming in on the 4-hour time frame with the Ichimoku cloud up, QQQ's extended support line could be hit somewhere around 478 to 486 depending on where it gets hit. And as you can see on the 4-hour, there's a bunch of Ichimoku cloud support that lines up with that. Unless we get some pretty negative headlines, especially considering the market has literally been shrugging off a recession and stagflation warnings, the market appears it wants to keep pushing higher. The exception to that is if we get bearish enough headlines and start breaking these supports, as we'll discuss here in a second, the VIX is moving down into strong support at the same time that the market is at key resistance levels. Point in case, if we look left, look where QQQ is approaching. This is the point at which the market began aggressively selling off again after this little short rally, which was very arguably a bear flag, somewhere basically around 493. Breaking above that level could squeeze shorts, but we always have to be mindful of false breakouts as well, because there is a supply zone between about 500 up to 505. Looking at IWM for small caps on the daily, there is also RSI bearish divergence on the daily for IWM. Its upper Bollinger Band will be around 204.40, confluent with where the Ichimoku cloud resistance begins to thicken again. I went more in depth into where IWM could be headed in my last video linked above, and that analysis hasn't changed. Zooming in on the 4-hour, one very important thing to note on IWM that differs from SPY and QQQ is that it has already broken below its support line that goes back to April 9th. And it appears to have already confirmed it as resistance where it tried to push back above it and it couldn't, which is definitely not bullish. But it is above this key level of roughly 199.50 to 200, which it could use to push up from. But if it breaks that support, it could head back down to test support around 196 and all the way down to about 191. And if for some reason it just kept pushing down, it eventually would retest that previous resistance line that goes all the way back to February 21st and see if it could treat that as support. Looking at Bitcoin on a weekly time frame, in the presence of new data, we have to adapt. I've been pointing out this rising wedge in white for over a month and sharing its downside target. But when patterns don't play out, we always have to be mindful that there can be an even wider structure in play. Point in case, there is a possibility that Bitcoin is inside of this channel here in purple, and ignoring all of the other support and resistances that I've shared in previous videos, the upper bounds of this channel would be around 130 to 140,000, depending on where it got hit, and the lower bounds would be around 75,000 to 80,000. And the market has been very bullish since we hit this local bottom. and it's something we can't ignore, even if the fundamental reasons don't really line up. Looking at crude oil futures on the monthly, I'm going to just keep covering this pattern because it's so important. This descending triangle is indicating that the futures could head down to roughly $3, which is even lower than the pandemic low of 6.5, which implies that global demand could absolutely dry up. Zooming in on the 4-hour time frame, the futures failed to complete this inverted head and shoulders pattern, which was targeting roughly 70.30, and would have placed it back above this previous support line, but it obviously treated it as resistance. Now it formed another smaller inverted head and shoulders with a target of roughly 65.15, which would push price back above that support, but we'd absolutely have to see that level confirm as support, or it could just be a look above and fail, further damaging the bullish case for oil. Moving over to Dixie, the dollar strength index on the 4-hour time frame. The inverted head and shoulders pattern here that I've been sharing for weeks with the neckline here in purple is still trying to play out, but it's inside of this long-running bearish channel in light blue. When I throw up my indicators, we can see that it almost touched its 200 period simple moving average on the 4-hour time frame and initially rejected. Zooming out on the daily, because of this pullback right here, it's now targeting roughly 101.60 instead of 102, which would basically have it hitting the upper resistance line of this channel, as well as the beginning of strong resistance on the Ichimoku cloud. And the way that the market has been pumping up with Dixie tells me that if it rejects from this level, we also may see a pullback on SPY and QQQ. Looking at the ADD, the market breadth indicator on the 4-hour time frame, I'm still being very, very mindful of this symmetrical triangle, which does appear to be valid based on the price action, and indicates that up and down moves on the overall market are likely to contract and be short-lived until this breaks out. If you missed my recent videos, its apex is indicating that the market is going to make a major decision on or before May 28th. And Nvidia's earnings is out after the bell on the 28th, but I'd love to hear your all's thoughts in the comments below on which way you think the market is going to break and what might be the catalyst. Looking at the VIX on the 4-hour, a lot of people are asking my thoughts on the VIX. I still stand by my thesis that we are very likely to see a strong bounce around 2150 when this multi-year trend line in dark red gets hit. And that's not to say that it will lead to a market reversal, but I would at least expect the market to noticeably pull back when that gets hit. And if we get below that line, there's also a potentially another ascending support line here in light green that connects the lows of February 21st and March 26th. And it could lead to a bounce on the VIX if it hits roughly 1950 to 20. Call me a permabear, but frankly, I still believe there is no fundamental reason for the market to be at the level it's at right now. The market is rising on hopium for trade deals and that the AI trade is still strong. But if it doesn't get the news it needs, I could see it roll over pretty quickly. Plus, retail has been buying this dip in record numbers while quote-unquote smart money has been unloading. Who do you think is going to be right? Looking on the daily, we can see how the multi-year trend line lines up perfectly with the daily Ichimoku cloud support, as well as the 100-day simple moving average here in blue. And the 200-day simple moving average is just below it at the roughly 1930 mark, which would also be confluent with this ascending support line in light green. What's my point? I think the market is about to have a decent correction, even if it continues higher afterwards. SPY may even poke above its 200-day simple moving average briefly, just enough to trap bulls. Then we get a nice rejection, and I'm not forgetting that the pattern on Dixie, which could also give us clues as to when to expect a pullback. Quickly looking at investing.com's economic calendar, the most key catalysts that are coming out are on Tuesday. We've got CPI coming out at 8:30. On Wednesday, we've actually got German CPI coming out, which could affect Dixie. And then on Thursday, we've got PPI, as well as Jay Powell is going to be speaking. Retail sales could paint a picture of buyer sentiment. And of course, we're going to want to keep an eye on initial jobless claims as well. And there's really not a lot going on in the way of earnings this week. although we do have Walmart and Alibaba coming out before the bell on Thursday. And Walmart tends to be a good bellwether for the overall economy. And we definitely want to be on the lookout for any trade deals that are made between the US, China, and other nations. So stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.